Good morning. I'm Vince Lancy, and in today's market rundown, we're going to talk about yesterday's price action across markets and a new report by Goldman sell side on copper mining, which I think is very interesting and something to consider going forward, given the potential for a shortage. Now, we'll get into that. All right, then we'll have some news headlines. But first, let's check the markets. The dollar is very strong, up 41 points at 104.38. 10-year bonds yields are down 3 basis points at 424. The S&P 500 is sideways to slightly softer at 52.44, minus 1.8 handles. The VIX is 12.96, steady. Gold is down almost $15 at 21.66. Silver is down 12 cents at 24.57. Copper is down 5 cents, over 5 cents, at 3.98. Bitcoin is down 814, over a percentage point at 64,682. Ethereum is 3,400 and change, down between 1.5 and 1.75%. Platinum, palladium are mixed. Palladium is up, trading 1013. Platinum is down, trading 906. Crude is up 30 some odd cents at 81.51. Natural gas is up nothing. It's perfectly unchanged for a change. 168.6. Grains seem to be down. Let's squeeze those up there. All three are lower, with soybeans leading the way, down a percentage point. We won't be hitting the teens anytime today, I guess. Corn is down 60 basis points at 4.29, and wheat is trading 5.47, down 4.4 cents. Okay. Let's get going. Oh, I'm sorry. These are the stories that were put out yesterday. The top 3 stories there are the mercantilism post that I think helps explain why gold is being repatriated and why silver is as well, which is a developing concept that we're going to be talking about. I had a nice conversation with Chris Marcus yesterday on this topic. There's definitely a collaboration on that. All right, then there's the big long. And GNR's quarterly report is out, and that's always a very good long form, and that is unlocked and accessible for everyone. All right, the main stories are Goldman has a sell-side research piece out on copper miners, I should say. The title is Copper Leaching Breakthrough Technologies, and it's dated today, March 22nd. It's pretty cutting edge, right? We got lucky. I'll just quote a little bit from it. The looming copper supply deficit our commodities team forecasts is driven not only by a lack of new greenfield mine developments and declining head grades, but also falling cathode production at larger, mature operations as oxide resources are depleted. Our analysis shows that a combination of new leaching technologies could boost the top 5 copper miners, BHP, Freeport, Codelco, Antofagasta, Glencore, production by a combined around 1 megaton per year. I don't know what that means. I know it's 1 megaton over the next decade. Yeah, it's probably per year. Rio is a buy. Could benefit from implementing Newton at Escondida, 30% ownership. There's a lot in there. And I would say that it's probably something you should read if you're you should definitely read if you're a miner person, and you should definitely read if you're a copper person. There's a lot of good materials on there, educationally speaking, and there are some nice graphics on the big miners and what they think their potentials are. A nice graphic on that, and as well as their buy recommendations. Keep in mind, it is sell-side research, and there are other opinions on that, which brings me to Simon Hunt. Simon Hunt is a veteran analyst and basically a geopolitical expert, in my opinion, who has industry and business relationships in China and Russia, all over the world. I hope I'm not speaking out of turn about this, but Simon, I have been reading Simon's stuff when I could get it. going back to the Russian Ukraine situation. I found that his insights into geopolitics were very good. He's looking, through the copper lens. You can see the world in many. You can see many facets of the world. Anyway, so he and I connected, and he now subscribes to GoldFix, and I now subscribe to his content. And he sent me one. I have one of his reports that I have permission to share with the public, and I will be doing that as soon as I drill down on it. And the reason I bring him up in this context is because he and I both know that there's two sides to every coin. So when you're talking about the depletion of copper, the shortage of copper, and I'm not saying it's not real. This is not my, forte. That's why I read people like Simon. There's two sides to every story. So I'm going to drill down on Simon's side. I've talked about copper recently and Goldman's pieces. So I want to see what Simon has to say on it, and we're going to present that as well. Okay. Anyway, the Goldman report is attached for premium, and it's must read if you're a mining person. I've been reading a lot about copper now because I see silver's behavior and copper's behavior increasingly linked. It has been linked for some time, but even though it's precious, it gets traded like it's base. So I need to re-educate myself and get up to snuff on copper so that I can better be prepared for the coming silver tsunami. All right, price action is the next thing. So hi to Simon. Price action. What happened yesterday? All right. They completely destroyed silver, but let's start with gold. All right. Gold, they slammed gold 50 some odd dollars off the highs. But it was basically unchanged on the day. Okay. Think about that. Slams, which are prevalent, do corrections, we'll call them, right? Do come about opportunistically, meaning there's a data point. There's something that shows a correlation is in play, and so gold gets sold. Well, there aren't many correlations that are easy to play with right now. And so slammage, if you want to call it that, comes after rockets. Now, take a look at this. Now, I'm not saying history will repeat again, but I am saying after this, market consolidated, and there was, in my opinion, a big buyer in this area here, a sovereign wealth fund and or central banks. So now you have this. You can look at this technically, and there's probably something really cool in here technically. But I'm just looking at it like, again, I've said it before, I'll say it again. They don't care about the price. They care about the speed with which it gets to the price. So I think we're going to test this area again here, and we're going to see if these buyers are here. Gold's in play, right? Okay, which brings us to silver. What did I say yesterday? Sadly, I got the live chart up. What did I say yesterday? They will put their foot on silver's throat to get gold down. Well, you're looking at this going, oh, they really cracked silver yesterday. This is really bad. No, it's not really bad. I mean, it's really bad if you're living and dying on the day-to-day price, which I hope you're not. But admittedly, it's demoralizing. So let me make it a little bit less demoralizing for you. For the last 20 years, they've been selling silver to get gold down. It just hasn't been obvious to most people. It has been obvious to me because I've been victimized by it, and I've seen it, and I've talked to people playing it. But now it's become grossly obvious, right? I've talked about it. People are aware of it now. But now look at this. Look at it this way. They had to get silver down 3% to get gold to unchanged. Right? Okay. People that are in control or in charge of global supply and demand and trade these assets on exchanges from a governmental bias, they don't come up with new ideas when the shit hits the fan. They do what they've been doing, only more. So the expression is put more on, you moron. And I'm not saying that they're morons, but I am saying that they're going to do what got them there. They're going to do what they've always done, at least at first. And so they slam silver 3% to get gold unchanged. And no one's buying silver. What did I say? There's no macro discretionary buying of silver. You can bully silver around when no one's paying attention, and you can use that to get gold unchanged. Well, how does gold get sold if silver's being sold, you may say? Well, I'm a smart trader, hypothetically, and I see silver getting cracked, and I'm like, I'm a buyer of gold, no doubt about it. But I'm like, you know what? If they're going to sell silver, then maybe gold will back off. And so my bid goes from here to here. My bid goes from here to here. They're not, the point is, there's no selling of gold. There's only bids backing off in gold. And there's going to be a point where they say, you know what? I'm not going to back off any lower than here. This is ridiculous. And some of these traders are going, you know what? Look at silver. That's ridiculous. And they buy some silver. So you're going to start seeing silver buying on dips. I'm not proposing that you go out there and speculate and buy silver on dips. I am saying that silver is the tail now being used to wag the dog of gold. So how does this work out in the end for silver? Well, it works out in the end for silver higher. What's the end? Is the end tomorrow? No. Is the end a year from now? Could be. Could be a week from now. Which brings me to this. Just to touch on it. This morning, or was it last night? Steve, I don't have his logo is not showing up here. I want to do that right. I don't know how to shrink it. We'll just do it this way. The HSBC is the custodian of a European silver ETF, okay? Their inventories surged 56% in 1 week. You can see from that graphic there. And people are going to make a big thing out of that. And it is a big thing. But it's, but the silver's going somewhere and it's coming from somewhere. See, that's the thing. All the GLD and SLV that's leaving here, all the silver that's leaving the vaults in China, all the silver that's going to India. Look at where it's coming from. Look at where it's going to. All right. So, and it's a big deal. I'm not saying it's not a big deal, but, let's read a little bit more. HSBC moved in November. HSBC moved to consolidate precious metals trading under one roof in the third quarter, transferring all associated market risk and part of its physical assets from its U.S. subsidiary to the non-ring-fenced UK unit. HSBC USA Incorporated sold around $900 million worth of physical inventory to HSBC Bank PLC during the quarter. This is self-trading, guys. They're not trying to drive it up. They're trying to make sure it doesn't go up while they trade with each other. Part of a decision to refer all stateside precious metal financing and trading clients to the London desk going forward. So a month, 2 months, 3 months later, silver shows up in a Euro ETC in which they are the custodian. So hat tip to Semper Vigilantes for putting that together. I'm going to put it together in a little bit in a little further way now. It's mercantilism, right? The world is, I'm going to do a whole piece on this, but just to give it to you before everyone else, while everyone else is still trying to digest it, look, globalization is done. It's dead. Okay. All right. Recess is over. Everyone's taking their balls and going home. Okay. The global vaults, exchange vaults, are global representations, are manifestations of globalism. And as globalism shrinks, everybody takes their ball and goes home. Why do they need their balls back? Because, and here's the payoff, because there's not enough gold and silver, I'm not just throwing that in there, and silver going around because it needs to be used now. And it's going to be used as collateral. And the BRICS are telling you that gold is already being used as collateral. So if there are 3 shorts against 1 ounce of gold, well, those 3 shorts got to be covered because I want my gold back. Same thing for silver. And what we're going to find is that as the financialization shrinks and indeed globalization shrinks, as the water recedes, as Warren Buffett likes to say, we're going to see who's naked short, who's naked, literally not wearing clothes as the water recedes. So that's what's going on. So to the extent that you're going to have spikes, and you will have spikes, and we're seeing that, you have someone going, oh no, well, a scandal is out there. I don't know where it is, but a big scandal is out there. Someone has too many claims on too little collateral. And when a country says, I want my collateral back, and they say, I'm tired of waiting, you're going to see a problem. I don't know where it's going to come. I don't know when it's going to come, but it's incredibly important that these markets function or you're not going to have world peace. So we're going to find out in October. I think you're going to have I don't know. I think you're going to have an unveiling of sorts of a global international monetary unit like an SDR to complement the BRICS concept so that you're going to have international trade still. There's a lot more to it than that. But the point is, look, there's not enough metal that's available to collateralize the global trade. And so global trade is going to go down while metals prices go up. And we're seeing it. That's it. All right. So we did price action. We did a little price action. That's it. So price action, gold round 2, sovereign wealth fund buying may be starting. Silver, foot on the throat. Slam silver to get gold unchanged. Diminished returns. All right. Miners, not bad at all, right? I happen to be long some now. So it's like, okay. I was waiting to, for them to fall out of bed. At least mine didn't fall out of bed yesterday. Okay. We did the topics discussed. Let's go to the market news. The market news, nothing crazy, but all continuations of what we talked about yesterday. The U.S. accused Apple. It's fair game on Apple, right? Everyone is attacking the big winners, right? Shares in social media company Reddit leapt forward by almost half on its market debut. Okay, the bubble is still functioning. Apple and Alphabet's Google are set to face full-blown European Union investigations. As just mentioned, Nike will replace Adidas as a sponsor of the German national football team. Interesting, considering Adidas is a German company. Maybe they're going to move to China too. Who knows? Geopolitically, the Houthi, we're talking about pirates now, basically. I'm not saying they're dumb, and I'm not saying they're not well armed. We're talking about pirates saying to the Chinese, running a toll booth, you can go through, right? Ballistic missiles reportedly fired from Crimea towards, I'm not sure how to say that, Zaporizhzhia, and explosions were heard. I can't confirm that. EU is actively exploring how to work around an EU treaty clause prohibiting arms purchases from the union's budget amid efforts to increase financing for defense in Ukraine. They want to change the rules so they can supply more weapons to Ukraine, right? The rules are inconvenient right now. Okay, China's embassy in the Philippines said the Taiwan question is not and should never become an issue between China and the Philippines. That's right, they're saying stay out. Data on deck, there's no data today. There's a quick snapshot of the premium piece. Goldman Sachs special report on global metals and mining, including a list of companies they like. I'm Vince. Have a great day. Have a great weekend. Catch you later.